Hi everyone, my name is Wilson and welcome to Syfe Insights. For today, we'll be sharing more on how investors can position their portfolios in a rising interest rate environment. And of course, we also help you to discover some ETFs that might be useful in your investment journey. In May, the Federal Reserve raised its interest rate by half a percentage point, the most aggressive rate hikes in 2 decades. The Federal Reserve meeting minutes also highlighted the committee's plans to deliver more rate hikes within the year to combat inflation. Consequently, we have seen a major decline in the global equities and bonds from the start of 2022. The series of events contributed to this within a span of 4 months include rising interest rates, Russian-Ukraine war, and China lockdown. This has started many investors with the questions of how to invest in 2022. At first glance, this may seem to be a bad time to be invested. However, when examining the effect of past interest rate hikes on market returns, all major indices saw a positive double-digit returns if they remained invested then. The only exception was the 1990 to 2001 period, which could be attributed to the dot-com bubble crash. Whereas past returns are no indication of the future returns, we are of the belief that investors should remain invested and adopt a long investment horizon to ride out any short-term market volatility. The rise in interest rates provide a strong backdrop for financials. Earnings are likely to remain strong as regulatory disclosure showed that relatively modest increases of 50 to 100 basis points in interest rates would increase earnings by approximately 24%. Furthermore, valuation of the financials have fallen even when earnings have been robust and rising. When comparing financial companies with their S&P 500 peers, we also see that financials are trading at lower relative valuation compared to its peers in the S&P and also at its 10-year PE valuation. This suggests an undervaluation which could be an attractive opportunity for investors. Opportunistic investors who wish to ride on the rising interest rate environment can consider the following ETF with a larger exposure to the financials. Investors can adopt a core satellite strategy to gain diversification for their portfolios. And on its Syfe platform, investors can use Syfe Core Portfolios, which is a diversified portfolio that provides exposure to broad-based markets, to form their core investments, while the satellite portion can be represented by higher risk investments such as specific sector ETF or trades. The fund highlighted here can be used as satellite for the overall portfolios, and they should serve a lower weightage in the overall portfolio allocation due to their specific sector exposure. The aim here is to increase the financial exposure of the investment portfolio to position investors in this rising interest rate environment. Investors should also take note of the associated risks while investing in specific sectors, so we hope this video has shed some light on how you can better prepare yourself and take action for your investment.